Right now, there's one particular asset class in commercial investment real estate that's got everybody talking: apartments. Whether it's a small duplex or a 100+ unit complex, these assets just seem to be the #1 targets of investors. Of course, there's a few reasons for this. Financing is extremely favorable, almost more so than a primary residence. Add also the declining vacancy rate and surging rents, it's no wonder apartments are so desirable. But are we creating a bubble? When everyone's investing in the same thing, be it the tech stock back in 2000 or single family homes all throughout 2008, doesn't that cause everything to burst after becoming so inflated? I'm going to give you a quick rundown as to the positives and the negatives of buying apartments, so you as an investor can make a more informed decision. As I mentioned, probably the #1 reason investors are purchasing apartments is due to financing. The rates are just ridiculously low. As of the time of this video, rates for a single family primary residence are just shy of 4%. If you want to buy a 2 or 4 unit investment property, you're likely to get around 4.5% interest rate with a minimum of 25% down. But if you're looking into a larger 5+ apartment complex, you can get a fixed 5-year loan for as low as 3.5% with possibly as little as 20% down. That's right, you can get a rate cheaper than buying a house for less of a down payment than buying a small 4-plex right now. But wait, if you're looking at a much larger $3 million plus loan, rates right now are just above 3.3% fixed for 5 years. Compare this to any other type of asset class, be it retail, industrial, or office, then the interest rates are going to be a minimum of 4.25% with at least 25 to 30% down. Still good, but not nearly as good as an apartment loan. The second reason is the whole housing bubble crash. Most people still feel owning a home is one of the best investments they can make over time. However, in areas like the San Francisco Bay Area, most people can't justify paying a $3,000 or $4,000 mortgage when they can rent for $1,000 or $1,500 a month, especially considering home values are still fluctuating so much. People just can't justify buying a home that could easily lose value in the next few years and pay a large mortgage, when they could just rent for a few years until prices stabilize. After all, home ownership rates are dropping at the fastest rate right now since World War II. This means more people are renting, and if more people are competing for the same amount of apartments, landlords can charge more rent. After all, apartments and homes are viewed as a basic necessity. People are always going to need a place to live, whereas they might not always need a place to shop like with a retail property, or they might not need a hotel to live in for the night. But again, are we creating our own bubble? Again? No one can tell the future, but in my opinion, we're not. And there's a few reasons behind this. Currently, and likely for at least a few years, people aren't buying homes en masse. They're renting. There's also not a lot of apartment projects appearing in many established markets. And even if people are starting to build right now, it's going to take a good 18 months to 2 years for an apartment to be built from start to finish. Another concern is in regards to owners over-leveraging their properties. Yes, the interest rates are ridiculously low, but due to the recent crisis in 2008, most banks and government entities have imposed higher debt service ratios and have stopped using fake pro formas. In other words, you can borrow 75 or 80%, but you better make sure to have more income to cover the loan, and that income had better be current, not what you can likely raise it to. So in this current state, do I feel the apartment market is just another bubble waiting to burst? Not really. So long as investors continue to use leverage more intelligently and the market doesn't become flooded with new apartment buildings, most apartment owners with proper management are set to make a nice return in what most view as a very stable type of asset class. Now that's good to know.